Another day watching the bulls run away with the market. We're going to talk about the S&P and how we're breaking this little flag. What are the sectors that are moving? Probably not the ones that you think. We're watching the NDX continually grind higher and hitting new highs on the year. And now we're starting to challenge a 52-week high. We're going to talk about what stocks are driving it and what we need to look to see if it's going to continue. NYCB does a secondary and the stock actually goes up 10% on the news. We're going to discuss why this happens and what we should be focused on tomorrow for regional banks. The recent trough level in regional banks, and is that sustainable? What small speculators are doing in the market and how to use it to your advantage. We have to cover the major names that are going to come out with earnings tomorrow that have the potential to move the market. Let's get to it. Hey everybody, welcome back. So today was a really nice day in the market. We're just going to start with the obvious. Everybody can see this DTL or downward trend line. You can see right where we broke there. As always, subscribe to the channel, click all notifications if you want actionable information that can help you make better decisions tomorrow. So you see how your DTL's there, see how you're breaking out there, see how your volume's picking up. And this is one of the things I love where we all talk about breadth, and we're going to get into breadth in a moment. But you can see that your relative volume, while not above all my key metrics, this volume is above all this red selling. And I think that's an important distinction. So we are seeing more buying despite what people are thinking. And I think that that's going to continue. Now, there are some key levels that we were unable to get through, and there were some that we could get through. So we're going to drill into the ones that we were able to get through and see how we acted on those. So very clearly, you're going to see this DTL, downward trend line, on the hourly, right on the S&P. Click on that. You can just see all the incessant buying today. It wasn't one bar here or there. It was all day long since 11 o'clock. It was get me involved. And that's because it's becoming increasingly clearer of a couple things that we're going to address here. Number one being that they are probably very far off from raising rates. Now, if we take a look at this DTL downward trend line, well, we flip. Now, the very first thing when we flip a downward trend line, you want to start watching the higher highs, right? You want to start getting over those higher highs and seeing how you're going to react to them, and they become support levels. So as you flip them, resistance becomes support. So you can see tomorrow you're going to want to watch 41.6450 as your first support, and you just kind of walk up the line and see how you're reacting at these levels, right? And so you can see a little resistance there. Now, if we clean these all off, it becomes pretty clear that the most important line out of all of those is probably right here. It seems like that became an area of support and resistance, and it became a battleground, pardon me. So that is something that we're going to watch. Now, you come here, we look at the top of that and go, well, we're in the middle of all those bars, but we really weren't able to close over that. Is there something that's a little more glaring that we could just use to really mark it? And then it comes right there, and it's that 4180 level, and it's been there for some time. You can see it right here, and you can see it up here as well. Just that area, for whatever reason, 4180 seems to be our nemesis. Now, I'm not sure that we're going to break through or not break through, and we're going to discuss as why that's the case. I was asked an interesting question in the Alpha Chasers community today about, do I still think that there's this possibility of a head and shoulders even though we traded up today? And the answer is yes, it's still there. Now, it's changing, but you can see that left shoulder. And if you come here, we can see that head right here, right? So we can see this. Doesn't mean it's going away just because of what happened. I mean, you really, in order for a head and shoulders to completely negate, we really need to get above 4,200. Otherwise, you're still setting up to crack this neckline. It's still there, and it's still on the table, this 40-60 level down here. So yeah, that's still there, and we shouldn't rule it out. And you know, as I like to say, straight up's not a pattern. And I do want to show you one thing that is showing that maybe we are getting a little frothy. You know, and that does not mean that we're taking out new lows. I think we all have to wrap our heads around that if you miss the bottom, you miss the bottom. And now you have to play the hand that you're dealt. So if we take a look at this, we should probably drill into exactly what is going on and why this is moving the way that it is. Now, the number one reason that the ES is acting this way is because XLY just absolutely exploded today. Now, why this is so powerful, and I just want to show you this on the hourly. So you can see your opening price right here at 930. Now, you look at where you closed, and it shows that this moves even more substantive. and you show where you are right now, and you have a 2% move just in the XLY. Now, why is this important? Because you had earnings today, and those earnings were not great at all. And we're going to address that. But I think it's important to understand where you are sentiment-wise. So here we are having bad earnings, and there's no way to make these good. I mean, you can say, oh, well, they said this on the call. It doesn't matter, but they weren't good earnings. They lowered guidance, and we're going to get into it. But you look at XLY, and well, that's breaking out. I mean, you're back to a February high. You're setting up a breakout. I mean, that's pretty critical, and that's definitely something that we should pay attention to. So you look at the XLY and go, okay, well, what was the driving force? Well, Target lowered guidance. Okay, now, I don't know if Target continues to push. We don't know how that's going to play out. And, you know, one of the big things we're going to have to watch tomorrow for sure, we're definitely going to have to watch Walmart. Walmart is a market mover. Walmart can move the market. And we're seeing Walmart fairly weak today, which was kind of interesting. But this is definitely the one to watch tomorrow and see how it acts. With Target up, and why it bothers me is because they lowered guidance, but nobody seemed to care. I actually shorted it pre-market and did okay with the trade. But when I sit here and I take a look at this, for me, I have pretty high volume. So how low was the bar? How low were expectations really for earnings? And I think that's really the question. I think it's possible that people were expecting absolute disasters out of Target and Walmart. Well, we'll see what happens with Walmart, but like TJX, like this was not a great quarter. Now, by not a great quarter, I'm not talking about the quarter just happened, but the guidance was awful. So we have poor guidance, stocks dropping down. It actually was lower pre-market. And then we just formed this wonky doji that just locks us up. And now it's going to kind of trap us in this little box for a little bit of time, right? Because you have to think the dojis are, right, they're places of uncertainty. So you kind of come across and look at this. And you see that window right there, right? Straight across from here to here. That's what you're going to be looking at. So I think that you're going to be boxed in there, but why didn't we break down? Then you start going through like Home Depot and going, okay, well, Home Depot rallied. Well, Home Depot lowered guidance and had a really bad quarter. Why did we rally? Okay, so how baked in were these expectations? How baked in were these bad expectations? There is a link in description to get the newsletter. I put a newsletter out about retail this morning at 9 o'clock, and it's a free newsletter. Had you gotten it, you would be aware of exactly what I'm talking about. I strongly suggest you get it. It's free. So if you take a look at what's going on here, right? So we're moving. Okay, well, what's the next one that's going to come out? Lowe's. So now we have Lowe's that's coming out with earnings, right? Look at Lowe's. Look what's going on there. So why is XLY, and we know what the largest portion of XLY is, Amazon. Okay, now we've got gaps in the chart in Amazon. Always be careful of 2 gaps in the chart. There's actually 3, but always be careful when you see this. It usually means exhaustion one way or another, right? 1, 2, kind of 1 right here though. But always be aware of it, right? 1, 2. Let me see one down here. Usually it just means like here, 1, 2. You just want to be aware of it. They'll get a little, they might go up a little bit, but they usually get tired at some point. So be aware of that. It's just something to pay attention to. More obvious when the volume is absolutely huge, but we're going to want to watch that. We're going to want to see how that plays out. But this was really good news, and there's very little to say. Now, before we get into some other things, and we can see that XLY led today, I think we need to just talk about and be Captain Obvious here so that we can all see this. And I think this is really important, okay? This is Google today. Okay? This is somebody at 12 o'clock saying, buy me Google for the rest of the day. Okay, that's what that is. That's someone out there just buying Google every hour for 2 hours straight, nonstop. All right, that is not somebody that's going to day trade Google. This is not retail that did this. Okay, this was somebody, an institution or institutions that want in the trade. And that's how they responded, by getting very aggressive in the middle of the day. That's really hard to rule out. That does not mean you're going to go straight up. But it's very hard to rule that out and to say 1 o'clock, we just have people out there going, I'll take a block of 30. It's very rare to see that. You see that at the end of the day because they try to mimic what they're doing. But that shows you how much demand is for Google. And I think that's important because we're starting to develop a leader. And that leader looks like XLC, the communication sector. We'll keep talking about where's the leader. Well, we had to get over 60, and we're finally seen to be getting over that 60 level right here. Now, XLC has Google, Meta, and you can see how Meta's doing, right? Meta got through that 236, and it's continuing to push. But look at Netflix. Netflix is now participating too, right? And that's a pretty interesting pattern for people that like patterns. Up, right? 1, 2, 3, down, and then high. So that's maybe something to watch tomorrow. Might be something that you want to pay attention to tomorrow and just see how that acts. Now, if they're moving, well, that's going to give us a leading sector. So this is very possible that this little breakout finally solidifies itself as the leader. Now, you go back to here to August, and you get a 625 reading right here. Okay? So then we come back to here, and we see this little right here in June. And we're going to just drop a line there so you can see this. All right. So if we can get over this, 61, right? 61, if we can get over 61, this index or sector is at 52-week highs. Okay, that is not a market that is going down. Now, doesn't mean, again, that you're going straight up, but you need to pay attention to this. This is really strong. I don't care about the volume. People are constantly looking for reasons to not participate, talking about volume, talking about breadth. I'll say it here, and I say it 1,000 times. You just have to trade what's actually happening. Stop trying to predict what's going to happen. Set key levels, watch them, develop a process that works for you, and go forward. One of the things that I find really very hard to digest with what people are thinking is when they look at the NDX and go, well, the breadth is weak. Well, the breadth has been weak since October. And look at it. Well, the breadth's getting weaker. Okay, well, I don't know how they're defining breadth with new highs, new lows. That's fine. But if I take a look at this, and I look at the NASDAQ 100 stocks above their 200-day moving average, okay, I get a clear reading above 50. Okay, and I've been above 50 now. Let's mark that down to 50. I've been above 50 now for how long? Months. All of January, I've been above 50 on the NASDAQ. Okay, so when we talk about breadth and things not getting better, well, I see stocks in the NASDAQ, part of the NASDAQ 100, which is the driving force, that are constantly hitting higher lows, and stocks are constantly getting above their 200-day moving average. So maybe they're looking at the different metric that they shouldn't be looking at. Maybe they should be looking at stocks getting above their 200-day moving average, because they're certainly out there. I mean, we're seeing them every day. Here's AI. This was been a great trading vehicle for us for the past couple of days, just trading around it after that news hit. And traded it, got a doji, broke the doji. I mean, it was a very simple trade. Worked out great today, okay? And here you are, 200-day moving average. I mean, it's not rocket science how these things are working. And I would just really pay attention to that. Here's HZNP. It's another one that we traded. I actually traded this today. Right to the 200-day. Hits it, bounces, and goes. So I would suggest that you do yourself a favor and start this exercise. Take the NASDAQ 100 and go make a list of all the stocks that are above the 200-day moving average, because that's where the money's going. It's pretty glaring, and Tesla's not on that list. Tesla's actually below that moving average. Now, we have a bunch to cover here, but I think it's really important for us to understand exactly what's going on here. NVIDIA's hitting highs. Everybody wants to own NVIDIA. This is usually when I start getting to the point where I'm starting to think that we're due for some kind of pullback. Now, I don't have anything to suggest that. I'm going to give you a couple things that I'm watching. But once we start to get to that and we start acting like this, I do start getting a little nervous when we're up this high. But you can jump up, come back down, keep running for a period of time. And maybe that's what we're doing here. Maybe that is what we're doing. So I'm going to have to watch this. I've been watching it on a 5-minute, and we're going to go here and take a look at this. And you can see how we're getting ready to break out. I'm usually early with these types of calls. So what I would say about this on the daily is I'd let it play itself out. You know, this could get exhausted at an all-time high. right? Like that wouldn't remotely surprise me. That wouldn't even be remotely surprising. So keep that in mind. It could absolutely happen. When I said that it would get to 300 today in the room, I think people kind of scoffed at me, but people want exposure to AI. They want exposure into things that they feel have the potential that the internet had. NVIDIA is one of those names, no matter how you look at it. So keep that in mind. Now, before we get into some other names, I want to just talk about the regional banks for a second. Now, NYCB did a secondary. I've been saying this for a couple months now. We bought this in the newsletter right here in the Alpha Chasers community at 8.5. Now, there are two regional banks that were allowed to buy assets, NYCB and FCNCA. David Einhorn has taken stakes in both of those, okay? Greenlight Capital, huge value investor. Look at what's happening to both those names. This is when they bought assets, okay? This is what's happening. So all we're doing here is just grinding higher. That's all it's doing. And that's all it's going to continue to do. They're just going to grind higher. They did a secondary so that they can go out and buy more assets. I would not be surprised to just see this continually slowly grind and taking out these highs over time. Now, if you take a look at KRE, I think this is really important. It came out known today that Griffin has a position, Buffett has a position, Einhorn showed his position in his holdings yesterday. So all of a sudden, we're starting to see these value guys step in and start buying. Now, that's interesting to me. And there's a couple other things here that are pretty interesting. If we take a look right here at this level, you can see that 43 coming straight across. But let's just clean up everything for a moment, start over. And I want to take out the 9 right here. And now we're just going to drop in this line for a second so you can see it. And then we're going to just drop where we are right now. It's a positive divergence. So you have a positive divergence here. Okay, and that's interesting because it developed today. And that really developed today. And that's something that I'm going to be watching. So maybe it is the last washout. Maybe PACW will be the last one that may fall. We're going to have to see and play this out, but I wouldn't sleep on this when you start seeing these kinds of divergences. They can grind, they can take time. But unless you see another bank drop, and with rates cut, or this year they're predicting cuts. Now, I don't know if they do it or not, but if rates are cut, then their bond portfolios, right? If you cut their rates, then what happens is they just go higher. So in other words here, let me explain this, make this cleaner. So you cut rates, right? Rates are set at one price and the rates drop. As rates drop, okay, their portfolio will go up in value because the 10-year will go up in value. And it moves by every 1% is like a 10% move in the bond. It's a big deal. So it's definitely something to think about. It's definitely something that could act. Now, let's look at a couple things that I think are pretty critical to understanding why we're moving and how we're going to continue to move higher. So, went through this the other day. Just going to get rid of this oscillator or indicator here. And I just want to focus on this. So this is the NASDAQ relative to the S&P. Every bull market, okay, you want the NASDAQ to outperform. Okay? It's just the way that it is. You want growth to outperform. It's exactly what happened during the pandemic. And then you can see we went sideways for a year where we really didn't have any huge outperformance. And guess what you're setting up now? Rallies, pulls back, rallies to the neckline, breaks out of the neckline. It's exactly what you want to see. And this should make us feel comfortable longer term. Again, we want the NASDAQ to lead. You always want the NASDAQ to lead. You want growth to push. And I think that this is another important distinction before I show you a couple charts. I would really pay attention to XLY, XLP. So what this is it shows, think about it this way, wants versus needs. Staples versus wanting to go out there and buy something shiny. And what we're seeing is we saw this pullback in December, then we saw the rally towards the beginning of the year where the high was, kind of pulls back, and now you're setting up again. I would not sleep on this. I find this really interesting to watch, and usually you can do quite well just by playing this and watching when it starts to outperform. You want to buy the market when XLY is outperforming the staples. That's usually one of the best times to buy the market. Now, small speculator index position. I went through this briefly before, But what this is this is the positioning of the CFTC, and this is how they are positioned for the S&P. Now, you're at a negative 59.86 level right here. So on this map, just to put this out there, I have June 18. So in the past 5 years, that's the lowest. Now let's go back 10 years, and we can see that net short of positions by small speculators, this is the lowest it's been in 10 years. This is 15 years. This is 20 years. This data has been collected since 1980s. This is the single lowest net short position of the S&P, small speculators. And for those that don't remember, when we went over it in the previous video, small speculators are hedge funds and high net worth individuals. And they are completely out of position should the market rally. Completely. This is one of the single greatest contrarian indicators out there. Okay, and you can see it. When we're hitting highs and everybody has to be involved, that's usually the high. When we're hitting lows, that's usually the low. Now, this is a long-term indicator. This is not something that's going to happen on a Thursday or a Friday. And I want to show you what I think you need to be paying more attention to. Now, this is the graph everybody's talking about with this rising wedge, and all rising wedges, they're going to, absolutely break to the downside, except the ones that don't, that break out and hit new highs, right? So here we are in 23, and the Nasdaq's hitting new highs on the year, and we still have people saying that the market's going to crash. So here's where we're at. We have no idea what's going to happen, right? We just don't. We try to pretend that we do, but we really don't. We can only trade what happens. And we have to look at key areas of interest and see how we act. It's very clear that you're getting to one right here, right? 334 to 331, 3 points. Roughly, you're not that far off from it, folks. I mean, you're literally right there. If you take a look at it, just to kind of put it in perspective, you came here and you came down, you're at 1%. You're 1% away from hitting a 52-week high. Just let that sink in for a minute. The NASDAQ is 1% away from hitting a 52-week high. Now, as I say that, nothing's ever easy. So if we go here and take a look at this on an hourly basis, I think that this is pretty important. I'm going to get rid of this here and just show you this. So this is the RSI. Now, bear with me. What you're going to notice is every time that we are getting over this, you will see some kind of pullback. Every single time. You'll see them here. Right? It doesn't mean that they're always going to go. It doesn't mean that they're always going to be lower lows. They could still be higher highs and break out. But the higher that you are, the greater that you're going to come down. Right? I mean, you should be able to see these all over the place. And this is a really important distinction, right? You can see these. It doesn't mean that, again, that you're going to collapse. Like we went from 321 to 310, right? And then you can see the bottom right here and how that marked your bottom, okay? So it's a more of a shorter term indicator that can play out over days or weeks, but it's there, and I would not sleep on this. And so I'm watching this really closely because we're getting right up to here, and now I've got this reading of about an 80, which is a pretty high reading. Now, how high of a reading is an 80? Well, I'll just drop it here, and you can take a look at it and tell me yourself how high of a reading we currently have on the NASDAQ right now on RSI, right? And you can look at that going all the way back to when? October, back here. So if we look at this, and I want to be clear about this, down, up, down, up, down, up, right? And then it breaks out, okay? It doesn't mean that you're going to fall apart. It just means that you might pull back, right? That's what I'm saying. I'm not saying that we're going to collapse. I want to be real clear about that. So if we're looking at it from that perspective, that's one of the highest readings that we've had, right, of the year. So it's something that we need to pay attention to. And as long as we're staying above 50, I really don't care. But we might be getting a little ahead of ourselves. Now, for those that have been watching me for a period of time, you will know that when I say things like this, I'm usually early. I'd rather be early and aware. And I just want to kind of walk through this on the S&P. You're not seeing it as badly on the S&P for obvious reasons. You're not as frothy in the S&P. And I do think you're getting a little frothy right now out there. But we're not really seeing those levels on the S&P, but we are seeing in the NASDAQ, so be aware of it. Everybody have a great evening. Please comment on tonight's video. I tried to focus on names, actionable names, and what's going on in the market. The most important thing for me today with this market was understanding that when the XLY names, the target names, when those names came out and acted the way that they did, that told us everything. Okay, that was really important. So what I'm getting at is when you start understanding this kind of stuff and you start understanding sentiment and how important that is, not only what comes out, but how the stock reacts to it, right? That makes all the difference. Have a good night.